Do you think it is smart and wise to get back to the floating structure? Do you like the bridge structure even on certain opportunities? Are you fixed till death? What is your thought process as things change?
From a strategy perspective, Lone Star has a strong bias towards fixed rates because we know that investors like the stability of a fixed rate. And if you like your rate today and the deal makes sense with the rate today, then you go ahead and fix. And if you like your rate today, you'll like your rate tomorrow, right? And that's not necessarily true with floating rates. There's more risk. You kind of have to wake up every morning and check, not literally every morning, but SOFR resets monthly and you have to check rates every month or so. And it's like, okay, am I comfortable with this situation? So there's more risk, more variables with floating. So I think the bias is towards fixing. So even if the numbers come out to be projected on paper to be slightly better to float, we would bias towards fixing. So the numbers have to look a good amount better floating to actually make that pivot towards floating, because we know the difficulties that we're going to run into from investors and their hesitations regarding floating rates. So that's a big issue for me, big, I think, strategy, which is like part financial. Obviously, you want to underwrite the deal. What looks better from a projection standpoint? Stress test that. Obviously, don't use super aggressive assumptions and assume that the Fed's going to cut rates to zero. We're not doing that, of course. And of course, buying 2-3 year rate caps, whatever makes sense. But yeah, evaluating those two options from a financial standpoint, but then also looking at it from a strategy and from a non-financial, from an emotional standpoint, and think about that as well.